here we go. We have a daily chart of the S&P 500 in our market maker system. This was all of the calendar year lows. We are back above these bars, these diamonds that go across here. And our analysis was to come down and hit 1075 and then have that upside volatility. Just as we had done before. Upside volatility. Upside volatility. Upside volatility. Upside volatility. But every upside volatility is a short-term trade. Then we look to see where the next reversals come in. Since the calendar year low right through here, this whole area right here, is we did break this. But now on the way up, if you go 1075, and the high today on the S&P was 1159.71. If you so kindly go 1075 minus 1159.71 equals 84 upside volatility points from the second calendar 52-week low within the overall S&P 500 bear trend structure. And every time that we had the great moves up, there were great trades to reverse and great trades to sell into rallies and great long trades. You got past the third day. Today, we're in a third day bottoming process right here with the little distribution. Last time when we got to 3 days in rallies, it looks like this, and we continue to the fourth and fifth day before the all-time reversal and making lower lows from here to here. Don't tell me so, because that's exactly what we did. Now, when you go 3 days up, like you did here, 1, 2, 3, bam! On the fourth day, that's what the reversals look like. Third day, we're here. Tomorrow will be the fourth and the fifth day of this current bottom at 1075 MMTs. But here's what a 1 day, a 2 day, and a 3 day consolidation before you can break higher. That could easily happen in here as well. However, the long calls, the call options that were up and out of the money was the place to be. The calls were totally deflated, and the put side during all of this last bottom were inflated. So the call side needed to go higher, and equities needed to run in volatility off their bottoms, just like the S&P and everything you've been doing since you've been here from day one. Now, when we do get to the next highs from that low, is when does the next distribution come in? They look like this. They look like this at a top with confirmation on dailies. They look like this on a 5 day, 1 day up, 2 day, 3 day, 4 day, and on the 5th day, bam, right back. So the shorter term on the S&P 500, its earnings calendar, it is right now 8:58 going into lunchtime in New York, almost 12. And the S&P 500's been doing what it's doing. And not only that, they walk the tape within the 52-week low, that they like to get this secondary low and then try to take markets higher. But they will be dealing with earnings next week and the week after, and they will be dealing with lower growth rates. They'll be doing. That's all about one thing, MMTs. It's all about directional price volatility. 3 minute of the S&P, as you can see, we broke the other day at 1132 once we got up here. We did not want to break these key areas across here. We've rallied up, we pulled back, and we keep making higher highs all the way up here. And we made the higher high on an intraday level up there at 1159, and we pulled back slightly. Big deal. There is no selling during this upside volatility at all. The selling is very small compared to when we were doing other days on the S&P. It would look like, since we hit the bottom at 1075, you can see how we went straight up miraculously, straight up, as anticipated and as warranted, where the bull would sit on the sideline and miss the whole move here to here. So from 1075 to 1159, most of the majority of the bulls out here, because they're so terrified about the market, have been left out of the rally where we had this low pegged to get net long across the board within the short term trading ranges, S&P 500.